corporate story this morning, and it continues to be IndusInd Bank. We've spoken about it in the weeks leading up to today. But let's talk about the latest development. Vishwanath Nair, editor of Banking and Economy, joining in to tell you about why this is such an alarming update. Vishy?
Good morning, Alex. So a couple of things that the bank has found recently as part of an internal investigation. The first one is about 674 crore worth of incorrect interest income that was booked in the microfinance division. This happened during the first 3 quarters of FY25. So now, of course, the conversation is that in January of 2025, the bank has actually adjusted these amounts, as we're supposed to take comfort from that. The second important announcement that came out as part of the same disclosure was that the internal investigation also found about 595 crore worth of unsubstantiated balances in the other assets accounts of the bank, which was again set off in January against balances in the other liabilities division. And the bank is saying that this was done because there was a whistleblower letter, and on the basis of that whistleblower letter, the internal investigation was conducted, and that's how the bank found out these issues. The internal investigation has also assigned the accountability in these issues, and that the board is now working on implementing appropriate action against the people who are accountable for these balance issues. Now, remember that these two are additional issues on top of what the bank had disclosed earlier in March about a problem with the derivatives accounting, which led to about a 1,960 crore worth of hit on IndusInd Bank's balance sheet for FY25. The result of that is that the CEO and the deputy CEO both have resigned with immediate effect. Currently, the bank is being run by a committee of executives. 2 executives put together are currently managing the daily affairs, and the bank is on the lookout for a new CEO. Of course, it points to clear gaps in the way that the bank's internal controls were working and how its accounting was being executed internally. And we have with us Abizer Diwanji, founder of Neostrat Advisors, joining us on the phone line this morning. Mr. Diwanji, just tell us about, does trust then now become a collateral damage in this entire scenario?
Yeah, I think trust has become the collateral damage right from the time the derivatives issue was identified. And successive revelations, whistleblower letters, etc. coming through actually reinforce that. And that is the sad part. What is really should be happening is, rather than dripping some of these news, a collated single disclosure to say that we have done a detailed review. Many agencies have done reviews. The board has been appointed. I think the board should have waited and said, here is a comprehensive list of problems that we have identified out of our various reports, disclose the root cause of some of them, and then say that, this is the comprehensive measures that you are putting in place to correct the situation. That's the way to kind of belly a trust deficit. The other thing is, a trigger being a whistleblower complaint also tells you that internal controls over financial reporting need to be looked at more aggressively, and internal audit, etc. should have tested that well. The auditors should have tested that well. So there are many lines of defense which seem to have been vitiated here. So I think the overall confidence in numbers may be impacted.
Mr. Diwanji, I'm also taking a little bit of umbrage on the kind of language that they're using. First is incorrect interest income is a term that they've used in the disclosures. Then they've said unsubstantiated balances. For a bank of IndusInd Bank's size, with the immense resources and the kind of accounting prowess that a bank is expected to have, how are you looking at this language? Because it seems like it was put out in a hurry.
No, this is clearly language meant for public disclosure. I'm sure there is more to it. And at times like these, I think it would have been better to come, as I just said, in terms of the root cause of why this happened, how this got discovered, and what are the remedial measures. If you put out something like that on a more comprehensive basis, that would help. So just saying that, there is an incorrect interest, but I think going to the root cause, because incorrect could be many things. It could be a systemic error. As simple as that. Where interest income has been calculated incorrectly. It could have been incorrect tagging of NPLs, for example, where interest income ought not to be accrued, but yet it was being accrued. Or any such reason. So mostly systemic as far as interest income is concerned. As far as suspense accounts are concerned, or the other assets, other liabilities are concerned, I think that's a minefield. And that needs even better explanation, because in a bank, as most bankers as well as accounting people in banks would know, that the other assets, other liabilities are actually critical balancing figures of any bank's balance sheet. So ultimately, suspense accounts sit there, ultimately unreconciled accounts sit there. And simply saying that we wanted to adjust one against the other may or may not be the right answer. And at least deserves a clarification. So you actually come out as to what was the root cause of these other assets, other liabilities misstatements, and what is the corrective action, because you never know. It could hit P&L, it could hit asset balances, it could hit anywhere. And I think at least in times like these, when confidence is lost, disclosure and appropriate disclosure is the best remedy. There will be a dip in our eyes, for sure.
I mean, it seems incorrect is probably the wrong word if it's been going on for 3 quarters. I mean, one would say that that's the definition of overseeing and probably overlooking a problem. Anyway, the last question I wanted to ask you is with regard to the current situation at the bank. There's a board. There is obviously RBI scrutiny. They've not yet found a new CEO candidate yet. But tough questions and tough situations for these group of people who are currently managing the bank, right?
Oh, absolutely. I think it's an uphill task for the people who are doing it, and kudos to them. And I always keep saying it. We have a wartime chairman in Sunil Mehta, and I'm sure he's on top of things. He's dealt with similar banks in the past. And yes, the oversight team is there. The new operating team is there, but actually getting to the root cause of what's happened on an operational basis needs a thorough review. We've had so many agencies there. I think collating some of those reports, putting it together and finding out where the larger picture has been missed, and coming out with a comprehensive plan to rectify that, I think would be an expectation, and it is an uphill task.
All right, Mr. Diwanji, thank you so much for taking time out in the morning and talking to us. So, Alex, what Abizer Diwanji is saying is that there needs to be a root cause analysis and a comprehensive report rather than this drip piece of information. I tend to agree with him on that.
No doubt. And a lot of investors that have held faith will also be very agreeable to that. Let's find out how it starts in trade. We'll know soon enough. But in the meanwhile, let me go across to Kush in studio just to give you a sense of how to approach this tactically. I know that you've spoken about a few banks, Kush, that you should consider trading in. Do you stay very clear from IndusInd Bank, considering everything that we've heard?
Oh yeah, miles. I mean, don't even touch it with a barge pole kind of a scenario now, because this is, even without going to the charts, this is like a breach of trust second time over when everything seemed to be falling in place. Now,